How might a recession affect the syndication or fund business? This is a great question. This is a very timely question because there's a lot of talk in the media about inverted yield curves and all sorts of things that happen that cause recessions. And, in a funny way, when the media starts talking about a recession, people start getting nervous about a recession. When they get nervous about a recession, they start spending less. And when they spend less, you have a recession. So in a funny way, maybe not even funny, the media creates this frenzy that causes the recession itself. And maybe there are political reasons that they want to do that because there hasn't been a sitting president that's been reelected during a recession. So maybe there are some different kinds of reasons that they're incentivized to do this. But whatever the reason, here's how it affects the syndication business. The stock market, if it starts to decline, people start looking for other ways to make money. Now, short-term investors are going to move their assets around. Professional investors are going to handle things differently. But remember that 99% of the people in the market are retail investors. Retail investors tend to get very nervous. Frequently, they'll start to sell, which is never a good idea, but that happens a lot. They sell, and what they do is they try to move their assets into higher yielding, better alternatives. Now, a better alternative might be real estate. It might be some other income-producing asset. Real estate is always a very good hedge against inflation, and it's also a very good alternative place to put some of the assets. So a person might have, if they've got 100% of their assets total, 60% might be in stocks, 20% might be in bonds, and 20% might be in real estate. So we're always targeting that percentage of assets that people have that are not part of their stock market pool. Now, the other thing is that real estate values could decline. If you're holding current assets, then that's something that could happen. But if you're going to start a new fund or a new project, then this gives you an opportunity to start buying lower and buying as other people are selling. So anything that's new, any new kind of fund is going to come in at a significant advantage over one that's holding a portfolio of existing assets that were potentially purchased at a high price. So professional investors make money on the way up, they make money on the way down because they understand where value gets created and they understand how people think about the way that assets are moved. So if you currently hold assets, then you might think about starting a new fund so you can ride the wave up. Or if you have the ability to buy declining prices into your current fund or your current situation, as prices come down, that's a very good strategy to employ. But remember that consumers, as they move money from the stock market when they get nervous, are going to be looking for higher yielding alternatives, which is what real estate is. So whether the market goes up or the market goes down, there's always a place for professional investors to make money. Retail investors get very nervous. Professional investors tend to keep their cool and succeed and prosper regardless of the kind of economy that we're in. You just have to pay attention and understand the markers of that economy. So that being said, this is a great business. Just go out and stake your claim.